Hey everybody, welcome to Stock Trading Pro. My name is Pete Renzulli. We have a lot to talk about today. Big week setting up. This is actually going to be a week we're going to spend a lot of time on Tesla stock this week, and we're going to build a case for a short-term stock market rally. I'm choosing to call it a Santa Claus rally. I think we're going to get it this week, and I'm going to actually map out the exact reasons why so that you can use this kind of price action structure in your own trading, both in the market and in the stocks. We're also going to review the newsletter, the daily ticker, and how we're starting out for the week. We're also going to break down a bunch of stocks. We're going to go to the market, the sectors, the groups, and then the individual stocks. And we're going to give you one of my stock picks for this week. Elon Musk opening his mouth again, putting a poll out there, and it's not looking good for him right now. Let's just face it. He's probably getting massive pressure from his big shareholders. I know if I was a monster shareholder of Tesla, which I'm not, I'd be pretty pissed off with the amount of time and focus he's putting in Twitter right now as well. Has he solved that problem this week by putting a poll in everybody else's hands to push him off and tell him to go back to his real job? We'll see. But more importantly, this is the big thing from a trader's perspective. Last week, we actually built the case that all of that selling that Elon was doing and all the headlines kind of was lining up where a short covering rally was kind of in the cards just because the news was so obvious and you're not going to be able to short sell it or shouldn't be thinking about short selling it except on a short-term basis when those headlines came out. Now we got a headline on the opposite side. Here's the big thing I want to get across, even though we're going to break down the bigger picture of the market. This could be a fantastic week to be buying Tesla stock as an active trader. Again, everything we do here is for educational purposes. I can guarantee you I will be staring at Tesla today, looking for entries. If we get the kind of price action that I'm expecting this week in Tesla stock, this 1 week, this one day, actually, but never mind the week, could make your entire month if we seem to get the follow through. Now, if you've never traded Tesla stock, I would certainly, now that it's actually relatively inexpensive, it's in the 150s right now. If I'm not mistaken, it closed right around 150 on Friday. We're going to take a look at that. It's going to be really, really interesting. One thing I want to say, though, is if you've never actively traded that stock before, watch it a little bit so you get a feel for the price action, get a feel for the liquidity. Boy, it's going to be an exciting one. I'm really can't wait to jump into Tesla today with the rest of our community. But we're going to break down the rest of the market today. So stick around. We're going to be back in just 1 second. Okay, so I got to make sure I put that up there. So the big thing we want to talk about here today is obviously Tesla. We're going to break down the market, but Twitter users say Musk should step down, and Tesla's investors are watching that closely. So we're actually going to break that down before we get into the market. One of the things we talked about last week, and you can actually see how much we've been working this stock. One of the biggest things is paying attention to the volume. Volume is actually a big part of reading the tape. And obviously, there's been massive news and massive explosions in volume. Now, one thing that we mentioned last week, which is very, very important. If you're a regular viewer of the channel, you know that we spend a lot of time talking about real breakouts follow through, real breakdowns follow through. But the key to trading them successfully is not getting married to them if they don't follow through. So there's a lot of storm going on around Tesla stock right now, especially with Elon Musk doing everything that he's doing right now. So now you have to really weigh the odds of follow through if you are a short seller and a swing trade short seller where you're looking for further follow through to the downside. We got follow through on Thursday and Friday. It actually pulled the market down a little bit further, but, and this is really the big thing, when massive volume comes in at a breakout or breakdown level and you don't get those big beautiful candles to the downside. And I want to show you what we're talking about right here. And let me actually get rid of this stuff here. This day right here, this short-term reversal day, let me get these guys off the screen to make it a little bit easier to read. This day right here is the day that I'm really focusing on. Now, the reason I'm focusing on that was actually the day when they were talking about he's selling more shares, 3-something million shares, I think it was the number. And on that day, we actually reversed. Now, Friday was another big day where we actually traded into a bearish engulfing candlestick. So today, especially with this new poll that he has on Twitter, is going to be fascinating. So how do you trade Tesla stock this week? And more specifically, what do you do with the market this week and the potential of a stock market rally into the end of 2022? Well, it really comes down to you need to set rules. And I'm going to actually break this down for you right now. And at the end of this video, I'll actually post what I'm about to show you below the video in the description. But I want to map this all out for you. So we're actually going to start out with the newsletter. Okay. So I want to talk about the newsletter, and I want to actually get down. First, I want to make sure I say hello and good morning to Don Postman. Don, if I don't happen to speak to you, I want you to know how much I appreciate you being in the community with us, and happy holidays to you and your family. All right. So getting into the newsletter, we want to break it down. All right. So now coming into this year, and I want to be clear about this. This is what's super important right now, especially. And I don't know if I've told you this here on YouTube, but as soon as Thanksgiving comes up, I use the Thanksgiving weekend to start reflecting on the year of trading that I just had, and then start making plans for next year based on what absolutely worked and what absolutely did not work, and how I could do more of what worked and eliminate what didn't. Even after 23 years of trading, there's always a higher level for everybody. So I don't care where you are right now. There's someplace else that you could be just a little bit higher. And sometimes it's big changes, sometimes it's tweaks. So I want to walk you through what I'm showing everybody right now, and personally, quite honestly. All right. All right. So the market most celebrated the 2021 price action, most cursed the 2022 price action, right? What if I told you that experienced traders loved the 2022 price action too, as well? Many in my circle found 2022 to be a glorious year to be trading stocks. So here's the question. What's the difference between these 2 points, right? What's the difference between these 2-point results, right? Rules. Winners make rules and take responsibility. Now, I can absolutely tell you, because we have a ton of people coming into our boot camp every month, kind of getting behind the scenes to see what we can do. One of the biggest instant changes that we make for new members of our community is getting them to take responsibility for the outcome. Once you stop blaming the algorithms, you stop blaming the market makers, you stop blaming the specialists, you stop blaming the Fed and everybody other than the person that's in the mirror, you instantly start to take control of where you're going. So that's going to be a big theme. We actually have our coaching session tonight, which is our end of year review for 2022. We tell people to pour salt in the wound. What didn't work? What do you want to improve? And how specifically are we going to be looking to change that this year? So I just wanted to give some context for what we're looking at right now, and then we're going to hop into some more stocks. Okay. So rules. Winners make rules and take responsibility. Losers hope instead of plan. Losers blame the Fed for losses, which was a big part of this year. Everybody's blaming the Fed, right? Nobody's giving the Fed credit for last year, though. Everybody was a genius. Losers say the market always goes up and they don't need to make decisions. But what about if you're retiring during a bear market? Then what? Do you spend your retirement years angry and looking for something to blame and somebody to blame? There's 2 primary rules that everyone should know and use. That's a big thing. Having them and using them is not the same thing. Is the bullish trend obvious? And how do I know if it changes? Now, if you doubt trading can be that simple, think back to the beginning, almost a year ago, when in December into January of this year, and the market changed. Did you have rules that told you the party was over? Now, obviously the Fed gave us clues well before that when they said they were going to stop quantitative easing. But do you personally, in the time frame that you trade, how do you know if it's obvious, and how do you know if it changes? If you take nothing else from all of the YouTube videos that you have, and especially from me, and hopefully I'm helping you. If I am, do me a favor, give me a thumbs up and a subscribe so you get future videos. If you take nothing else out of any of the stuff you're watching right now, you need rules to know, is it obvious? And how do I know if it changes? Write that down. That's life-changing stuff in the market. Okay. And we're going to tie this all back into Tesla stock. All right. So how do I know if it changes? The problem with rules is that you're in charge. Now it's up to you to make decisions, and you can't hide and blame them, right? The other people. On the surface, making rules seems hard. So that's where many ways to look at price action. So many strategies, so many tactics, so many indicators. And quite frankly, that overwhelms most traders. And that's actually a part of the problem. So I just want to get to that right now. And I want to help solve that for everybody. So many people that come into our community, there's actually 2 big problems. Number one is they're overwhelmed and trying to look at everything. And that confuses people, and a confused mind can't make a confident decision. And number two is your timing is off. You end up buying stocks, does exactly what you thought it was going to do, moves a little in your favor. Yay, pulls back, you get stopped out, and then the thing does exactly what you want. So the first part is reducing overwhelm, and the second part is improving your timing. We're going to keep going here, okay? Write those two things down as well, all right? So overwhelm is what happens because there's just so much to watch. And worse, and this is real, and I'm saying this on YouTube, so it's a little bit ironic, you can learn a new method almost daily. Here's how to simplify. Put the market in a box, a clean, consistent way of looking at price action. If it's moving averages, then use moving averages. If it's MACD or stochastics, then use that. Maybe you'll make a combination of those. It really doesn't matter. What matters for success is that you stick to your edge. You'll give your edge a chance to do the heavy lifting, right? Now, I want to come back to this for a second, and I want to say this with all sincerity. And I'm saying this as somebody on YouTube right now who is hopefully helping you point in a direction. I went through this problem early in my career. When Barnes and Nobles and Borders books were right around where I was, I constantly felt when I first started trading, if I only knew more, if I only knew more, if I only knew more about the stock market, then I would make money. And that's actually how, I ended up with, that's only part of my book collection, hundreds and hundreds of trading books, constantly looking for the next book to give me the answer. When really looking back on it, I had the answer probably within the first month of trading, but I went on this constant journey feeling like I didn't know enough. And again, raise your hand if you feel like, oh, if I only knew more, if I only knew something different. I got news for you. Basic technical analysis is probably all you need to know, but you need to learn how to use it. The challenge, again, that a lot of people have that come into our community is not understanding that the market has different conditions. Not every deal is the same. Not every situation to buy stock is the same. It's our job to recognize, is it perfect? And then everything that moves away from perfect. And that does not take a lot of complicated strategy. But here's the thing. You need to stick to the same thing all the time. The more you're mixing and matching and trying something new every month, instead of having 1 year of experience, you end up having 12 different experiences, and none of them add on top of each other to gain that experience to ultimately make money. So again, big thing I want to talk about here to the end of the year, whatever strategy you're using, however you're putting the market into a box, stick with it. The more you change it, the more you tweak it, the more you're all over the place, it's going to be very, very hard to see consistency. And the big thing that we all want from consistency, literally every single person that comes into our community, even when I had my trading floor in New York City, everybody came into the business for the big dollars. But then after a while, you realize that trading is a skill and you have to learn that it's probably a little harder than you thought. At that point, everybody makes that shift. I just want to be consistent. I want to own my time. I want to have financial freedom, which for everybody means I want to make more than my bills, and I want to work when I feel like working. Consistency comes from having rules. Write that down. The better your rules, the more defined your rules, and the more you follow the rules, however you put that market in a box, that's where it comes from. Okay, so we're going to keep going. I want to read that last sentence again. Okay, maybe you'll make a combination of those. It really doesn't matter. What matters for success is that you stick to your edge and you give your edge a chance to do the heavy lifting. Now, it really doesn't matter. That's the big thing here, right? I'll bet you glossed over that sentence right now. 4 simple words that can change your trading results from negative to positive. And I don't say that lightly, all right? Struggling traders believe that they need to know more. If I only knew more, then I'd be profitable. I used to believe that too. It's the reason I have hundreds of trading books. Once you have an edge, it comes down to making more trades, cutting losses, and learning to make more on the winners. So let's think about that, okay? This part right here. Making more trades, cutting the losses, and learning to make more on the winners. So think about that. The whole secret to success comes down to having an edge that has a track record. A track record that means it happens more often than not. Doesn't need to be this ridiculous win-loss percentage. We're going to get to that in a second. The long-term success in trading comes down to understanding that trading losses are a business expense. You kick them out because it's the cost of doing business. Does not mean that your system doesn't work. It means that particular trade didn't follow through. That's the first skill. The first skill is accepting the fact that trading losses are part of what we do. The second part is keeping yourself in the game to gain experience. Now, I'm actually going to talk about that. Okay. Making more could be holding longer or trading bigger, both if you're really good. Okay. My edge is order flow and reading the tape, a simple box. Again, putting the market in a box that tells me if it's obvious, if it's still valid, and just as important, when it changes. Okay. Your edge starts with rules for cutting losses. This is the rule number one, because you need to trade to learn how to make money. This is a big thing. And I'm talking to you, me, because I went through this for years, and I'm sure that you did as well, right? You constantly go in this loop where you're watching more videos, you're downloading more PDFs, and I need to know more, I need to know more, I need to know more. And you feel like all of those things are finally going to lead you to the answer. But I got news for you. You need to trade to learn how to trade, which means that everybody has a learning curve that we pay to the market while we're learning in expenses. It's just a natural function of learning any skill. I don't care if you go to become a doctor. You have to pay to become a doctor to learn how to pay to be a doctor. Trading is a little bit easier, quite honestly. The barrier to entry is so small, you just need a trading account. But what you need to do is decide how much you want to spend on that education. And that education is share size. What kind of share size are you trading relative to your track record of profitability? If you don't have a track record of profitability yet, you are slightly crazy to be trading bigger if your wins and losses don't come out on the positive side of the ledger. Gain more experience. But the only way to gain more experience is to keep your losses reasonable while you're learning and taking notes about what definitely works and what definitely does not work. So if I could give you one kind of foreshadowing or something that we're going to talk about on our coaching call tonight, which I can't wait. Last year, our end of year coaching call was 5 hours. We had to break it up into 3 calls. That's how long it was. Make a big list for you right now what does not absolutely work. That list is going to be gigantic. Picking tops, picking bottoms, trading in the middle of nowhere, averaging down. Write all those things down. Immediately stay away from those things. And now get to the other side and start making a list of what works for you. Which stocks are you making the most money in? Which patterns are the best ones for you? What time of day or week are you trading? Do you like to be long only, short only, both, hedge? Write that stuff down, because the list of stuff that doesn't work is going to be gigantic. And the other side, it's going to be so much smaller. And all you got to do is follow that side. You're going to be amazed. Just doing that one exercise will make a monster difference in your P&L. All right. So your edge starts with cutting losses. This is the one rule, because you need to learn how to make money. You can't trade if you blow up your account. So cutting losses gives you time to gain experience so you could make better decisions. If you're really smart, you learn from each decision and stop losing. You stop being a loser. Is that harsh? Good. It's meant to be. Results are results. Use your losses to learn and improve. Kobe Bryant was probably one of the best people at learning how to do that. Rule number 2 is the hardest one, holding your winners. We need rules to capture and keep profits. And I want to just come back to this, right? If we need rules to tell us when to get out of a trade, which is our stop loss, right? Dollar amount gets down to that price, we kick it out. That's the easier one. We also need rules to hold winning trades. We call that in our community the profit maximizer. So I want you to think about this now very deeply between now and the end of the year, and hopefully the Santa Claus rally we're about to get, we're going to make the case for that right now, is understanding, stop being afraid when you have a small profit that it's going to vanish. Everybody knows we all do it opposite when we first start trading, right? We hope our losses come back, and we're fearful that our profits will be taken away. We have to turn that upside down. Be afraid that our losses will get bigger and hope our profits get bigger. But hope for the profits is not enough. You need a system that tells you it's still valid. It's still valid. It's still valid. Hold on until that moment when it changes. So rules are the number one thing that are virtually guaranteed to make a difference in your trading career. Okay. And again, I say career. You're on this call right now. You're watching the video, whatever it happens to be. You don't need to quit your job. What I mean by career is taking it like a professional, treating it like, you know what, I want to be good at this. And you put in that extra time and you learn from your results and you ask good questions. That's what it takes. Okay. So we're going to finish this up and we're going to get into new ideas for this week. Okay. So rule number 2 is the hardest one, holding the winners. We need rules to capture and keep profits. The problem is our ego. As soon as we have profits, we take them and validate our trading genius. This is where the overhyped win-loss justifies your decision. Win-loss percentage is garbage. I could prove that 50 ways from Sunday. I win 70% of my trades. Yay, pat myself on the back. Woohoo, right? I'm a winner. Feels good. But in the black and white world of numbers, you're cutting your profits short. Think about that. Let that really sink in. Your ego stunts the growth of your trading business to validate the hard work. The hundreds of free PDFs and the thousands of YouTube videos worked. We made money on that trade, right? But let's think about this. Why would you get divorced from the perfect person, right? Why would you exit the trade doing exactly what you planned? So here's what I want to challenge you on right now. We all know when we have profitable trades, they pause and then they go again. They pause and they go again. So what your rules on the profitable side of the market need to tell you right now, and I'm hoping that you start working on this immediately, is you need to have rules expecting the market to pause and learning the difference or spotting the difference between a reversal and a pause that likely leads to continuation. So we got to pull ourselves back and say, oh my gosh, it's pausing, it's pulling back. I better take this profit before it disappears. This is where understanding how to build an argument into the idea comes into play. The more reasons you could put in where you expect follow through, and again, in our universe, it's the stock market power pyramid. First, we put what is the market doing? Then which stocks are doing the same as the market? Then which sectors, which industry groups, and which stocks. The more of those things you can put into the trade, despite pullbacks, you should hold those winners longer. But again, should and rules are not the same thing. No, exactly. It could be a moving average. It could be the previous candle. It could be the previous week's low. Doesn't matter, but it has to be consistent. Okay? All right. Okay, so why would you exit trade doing exactly what you planned? Fear. Fear of the gain being taken away along with your idealized self-image. So you got a little picture of a cat here with a lion, right? What do you see when you look in the mirror? The first rule is easy. The second rule is where fortunes are made. So let's talk about that, okay? The first rule of taking losses, super easy. You see the spot on that chart and you're like, that's where I'm hitting the road, right? If you want to make the money that you signed up to be a trader, you opened your trading account, and you want to move towards those dreams that you have of that unlimited upside, the beautiful part of stocks and the stock market, right? The fortune hides on the other side of making profit-taking rules. Write that down, and I hope that you become the most successful trader you could have ever imagined, because again, I'm telling you, learn from my experience with all of these books. The answer is not necessarily in 100 books. It's probably in all of the books, but we overlook the actual answer. When you make profit-taking rules, which should be preceded by market conditions that are better, everything changes. And you know what? I'm going to tell you the biggest place this changes. Raise your hand if you've ever hesitated because your last trade lost money, right? We've all done that at some period in our career. But when you get to the other side and you're making more on your winners, you're now developing a track record where your trading business has a profit history. When you have no profit history, losses are like a punch to the gut and you hate every single one of them because you're not making money yet. And that's the tough part of trading when you're still trying to learn how to make money. The exciting part is when you get to the other side and now you're making money when it's on the table and you're going to get it and you're leaving that trade out there. You know what bothers you the most at that point? Not losses. Losses at that point, you're like, all right, I had to put that trade on because in order for me to make money, I have to accept risk. So I'm okay with the loss if that one didn't follow through because I have a track record. But what's funny on the other side, the part that hits you in the gut when you're profitable is you're not making enough and usually not having enough size on your winners. So there's always another problem at another level. And I hope you have that problem because that means you're holding your winners longer. Okay. So now we're going to hop our way over into ideas for this week. I want to kind of set you up for this week. I'm going to give you the research that I have for this week, and I'm going to walk you through the rest of the newsletter. Okay. So we're going to hop our way down. So sector rotation. Sectors finish the week, but neutral. And I'll show you what that looks like in a second when we kind of dive into over here. This is how we finished the week over here, but there's a little bit different picture over here compared to how we finished over here and over here. I'm going to give you this in a minute. Okay. All right. Neutral meaning the numbers between plus and minus 3%. So it's kind of neutral. So over 5 days, I want to see it do more than 3% or negative 3% to mean something to me. Only basic materials and consumer cyclicals are red, but the numbers were deceiving. Last week was a beatdown after the CPI and the FOMC news. The bearish sentiment masked by 145 pre-market rally after the CPI numbers showed inflation slowing. All right. The massive gap higher hides all of the selling since then. So this is the last 5 weeks of the market. So I want to bring this out to you right now because this is critically important and why you want to run these kind of numbers and understand. I give this research to everybody in my community every day, so I'm actually doing it for you. But I want to kind of hopefully make you feel better at this particular moment. Raise your hand if you have found the last 5 weeks of trading to be tough and you're going in circles saying, what am I missing? Why am I not trading better? Why did the market become so much harder? So if you go back to what I said before about having systems in place for profit taking, you need to understand the kind of market that you're trading. So if we take a look at that and answer that question again, this is the last 5 weeks. Can you look at the last 5 weeks and say, oh my gosh, that was amazing. I should have been printing money. No, no. What you should have been looking at the last 5 weeks, if you have a box that you put the market in and you say, okay, it's valid, it's neutral, it's great, it's bullish, it's bearish, you should know based on the conditions that you're in, what type of profits to go after, what kind of position size, and how often and how active you should be. When you start to build these kind of models out for yourself and you start to pay attention to what was available, you no longer get angry because you say, well, look, the market was sideways for 5 weeks. Of course. Then you have to go up that power pyramid and find some other ideas. And I'm going to show you one of those ideas on top of the Tesla idea that we talked about before. Okay. So let's keep working our way down through this. So obviously that's the last 5 weeks, right? So we're shorting today, right? With the market pulling back and this big negative number, right? Big week was ugly, right? So we're looking for short sales today, right? Well, not so fast. A deeper dive. A deeper look shows the S&P 500 reached the average true move. The average bearish swing comes in at 30 to 35 points in the market. So exactly what does that mean, right? So what I want to talk you through now, this is really where you need to understand if I am about to hit that buy button, what is the likelihood of me making enough money to justify the risk? So we have a saying that I've been talking about for years since I had my trading firm. Pick a side, then pick a spot. Picking a side goes back to order flow. Is it obvious? Picking a spot means now you need to determine where is the optimal entry. The optimal entry determines if I buy right now, what is enough profit potential? What is the likely profit potential to justify starting this trade, right? So let's hop on back into what that means. The average bearish swing in the S&P 500 is 30 to 35 points. So if we kind of map this out and take a look at where we are right now, from here to here, and this is that 145-point move to the upside, which also coincided with this perfect resistance level. We're roughly looking at 410 down to 380. That's exactly 30 points, give or take $1. So the S&P 500 right now has gone what it normally does in a bearish swing, give or take another $3 to $5. So what does that mean for if you're a short seller coming into today? It means that the continued potential of the market going down this week is smaller because all of the bad news is out and the market already moved what it normally does. Now, did I just pick that number out of the air? No, we've been giving you that number all year. You can go back over the charts, and I'm sure you'll have a lot of fun with this, and look at the downswings in the market, in the S&P 500 specifically, and you'll find most of them are between $30 and $35. So now you have, again, putting the market in a box, say, what does it normally do? How do I know if it's valid? How do I know if it changed? So the side of the market on the downside is still obvious. We broke, and actually if we break that down, we'll show you that where the market confirmed a change of trend over here. Here's the uptrend. Here's where it broke the uptrend. It either had to break that to the upside to validate this or break this to the downside to confirm a new direction. It actually confirmed a new direction to the downside. Now, the challenge that we have coming into today is the bears don't have a lot of meat left on that bone for a short sale. So short sellers today moving stop losses lower because the remainder of that move is mostly used up. So what does that mean for buying stocks coming into today? Well, now that means I'm expanding the list of stocks that I'm looking to buy, and I'm going to walk you through how I'm coming up with that today. Okay. So moving further down into the rotation. So the expected potential on a short sale is not there to put on a new trade. Okay. New shorts. Any open shorts that are cash flow trade management. In our universe, we call that momentum profit maximizer. On the long side of things, meaning being a buyer, healthcare, real estate, and industrial saw a bullish tone and relative strength. I'd start looking there for new stocks to buy. Okay. Industry groups. Oil and gas held the bid, but real estate dominated the bullish list from last week. So just a couple of ideas here from last week to find some relative strength. We have Lennar with this gigantic bullish engulfing candlestick on Thursday, paused a little bit on Friday. We have VHI, and we also have Toll Brothers. So these are three that I'm going to be looking at this week for new swing trades for the week. The other side of the tape, holiday stuff occupies the bottom part of the list. Autos, department stores, entertainment, and consumer electronics. So those are ideas that I'm not looking to be a buyer of this week. I'm just going to leave them alone. If the stock market finds a bid under where we are right now, and let's face it, if Tesla finds a bid after all this news is now out of the equation, and after what Elon Musk is doing today, I'm going to be looking to be a buyer this week. Now, here's the big thing. Remember what I talked about just a little bit time ago where I said win-loss percentage is the most overhyped metric. It's a vanity metric. Let's face it. You could have a 30% win-loss ratio, and if you have the right share size and hold your winners on the awesome scenarios, you will make more on those 3 trades than the other 7 combined that were losses if you manage your risk properly. Again, I want to tell you this, having rules on your profitable side of the trade, and the second part is understanding when to size up and when to hold longer. The first part is rules before it happens. The second 2 parts are rules while you're in it. Very important. So what I'm getting to here is if Tesla finds a bid, if the market finds a bid this week because it reached that area where it normally stops and finds bids, then this week could be a week where we size up, hold a little bit longer, and make our entire month in a week where we could be looking at a rally. Now, that's one side of the equation. If the market rallies this morning and does not hold the bid. So now let's actually, what does it mean to hold the bid? That means if you're looking at a moving average, 5, 10, 20, whatever it happens to be on a short term, it means that it needs to stay above there. If you're using candlesticks, it could be the previous close. Again, remember what I said before. It really doesn't matter which one you use. It needs to be the one that you use all the time. If we hold that bid, and especially in the groups of stocks that have been strong, those are the ones that I'm going to be sizing up a little bit. Now, I want to give you this as well, just to give you an idea of some of the ideas coming into the week. Now, stacked order flow, this list is actually a little bit smaller, and you can actually see that we have a mix here. Industrials have been pretty strong. Boeing and Caterpillar, both of those are in a box. Consumer cyclical, Win has actually been pretty strong. Might be something you might not have been watching recently. If we hold the bid, these are going to be the ones that I'm going to be looking to be a buyer of. If we do not hold the bid, we also have a list of stocks on the other side of the market, which is much bigger. And you can see this is actually dominated by financial and technology. So there's lists of stocks on both sides of the tape. Now, I can hear you think, you might be like, well, why do you have stuff on both sides of the market? It's very, very simple. I would rather be prepared for an opportunity that never comes than not be prepared if it does. So if the market finds relative strength this week and it holds the bid, I already have a list of stocks that have relative strength that I'm planning to buy. If the market does not hold the bid, I have a big list of stocks that are already bearish. Now, we just talked about the average true move in the market. That does not mean that stocks are all at their average true move. There's still plenty of stocks near their optimal entry. So if the market opens higher and continues, I have a list of stocks that I just gave you that are bullish. If the stocks and the market open higher and lose that bid, Then I'm going to look at stocks that have relative weakness and be a short seller of those stocks as long as they still have profit potential. So I'm actually going to give you this list, so don't worry about that, okay? So moving along, we now have another list of stocks. This list of stocks are stocks over the last 10 days, and this list of stocks just now based on filtering out which ones have the best order flow. And you can see that the list of stocks right now on both sides of the market is pretty significant. One thing I want to talk about here is options expiration. And on Friday, one of the primary statistics that we look at from week to week, and matter of fact, every day, is I want to understand, has institutional attention started to go into a particular stock? And that starts with volume on daily candlesticks. And we are looking for a fuel or exhaustion, a large bodied candle starting a new move or a large bodied candle ending a new move. We won't get into how to use that right now, but just write that down. Normally, we have about 6 to 10 stocks that meet double normal volume. Well, Friday, because of quadruple witching in options, we had 98 stocks that met that criteria. So if you normally run scans for volume, you kind of got to put Friday out of the equation because those statistics with volume are kind of out of whack simply because of options expiration on Friday. So what are we looking at this week? We're looking for the market to hold a bid. If it does, we're looking for a short-term rally in the market, probably right around 400 to 403 in the S&P 500 will be the upside that we'll be looking to see what happens. So if we kind of map that out again over here, the level that the market was battling was up in this area right here, basically around 393. So we're roughly around $8 to $9 below that level right now. So you can see where we are right now. We're right around this area over here. And this is the area where we confirmed the change of trend to the downside. But I want to tell you that we've been watching it. We've been like a glue to it. 393 is really the number in the S&P 500 that we want to watch on the upside. So essentially what we're mapping out right now is if we get a rally in the market this week, that 393 level is the area we're looking for, which is roughly $9 to $10 higher than where we are right now pre-market. So that's how we're mapping it out. So it's going to be super interesting. If we rally, if we hold the bid, we have a list of stocks that we're looking to buy. If we hit that number and rally, that 393 level is the level that we're really going to be looking to say, okay, is this a short covering rally or have buyers now stepped up and we are now ready to see another move higher? I want to finish up on this. The last thing that people ask us all the time is how do I differentiate between a short covering rally and new buying? Well, short covering implies that there's a downtrend in the first place. To get out of the short sales, you have to buy it back to get it out. That's what short covering is. People are exiting shorts and getting out. The difference between a short covering rally and new buying is what happens after the short covering rally. If we go sideways on lighter volume after that, then we have new buying stepping in, most likely because they did not push it back down. If we have a V bottom and we start to head back down quickly, that was short covering and buyers are not in there yet. So what does that mean? If we get a fast rally up to 393 and we go sideways, could get interesting for that Santa Claus rally into the end of the year and maybe even into January. Out of everything I just said, think about everything we talked about. Having rules makes the difference between struggling and finding consistent success. We just mapped out ideas on the buying side of things and on the selling side of things and gave you a list for both. Let's see how this week unfolds. It's going to be pretty interesting. Keep an eye on Tesla this week. If you've never watched it before, it should be really, really interesting. Okay. I'm going to put these links below the video in the description, both for the newsletter as well as for the research. You can download a copy for yourself today. All right. Have an awesome day, everybody. Have a fantastic, fantastic holiday. If I happen to not see you, I hope I do. But either way, have an awesome day. If we helped you today, please do me a favor, give us a thumbs up and make sure you subscribe. All right. Have an awesome day, everybody.